Okay, I know you guys seen the title. There is still a loophole in crypto. That's right. I know you guys seen the topic, and today I'll be going over it. This video probably won't be formally structured, but I definitely, especially with Bitcoin having additional every 4 years after Bitcoin halving, normally we do see a rally in crypto. This year might be a little different, but we never particularly know. With that being said, I was definitely going to go over the loophole within crypto. Most people probably already kind of know this, but if you're not familiar with the wash rule currently, as of now, does not apply to crypto. And I'll go into details what the wash rule is. And by the way, if you wanted to see a full video on it, make sure you check the suggested videos where I go over what the wash rule is. But people typically what the wash rule is, definitely wanted to particularly do this particular video with crypto. A lot of people paying a lot of attention between this year. We had a lot of good news for crypto this year. The Bitcoin ETF end up passing, potentially Ethereum ETF particularly passing, the halving that occurs once every 4 years occurred. Typically after the halving, we normally see a big rally. This year with the ETFs, we've seen a rally beforehand, so a lot of people are still anticipating that after the halving, we'll have altcoin season as we did the other two bull runs or something like that. But in this particular video, I'm going to be going over the loophole for tax purposes where you can, if you end up utilizing this, you can be way more tax efficient and particularly actually pay no taxes on your actual gains. So, people may be like, okay, what is a wash sale? It says a wash sale is a transaction in which an investor sells or trades a security at a loss and purchase a substantially similar one 30 days before or after the sale. So pretty much is saying is if you want to declare the loss for that particular year and you cannot buy the same security, keyword security, if you want to claim that loss for that year. Now you can if you want to claim it for another year, but not that particular year. So if I end up buying the stocks, let's say we'll end up pulling up Tesla. So if I end up buying Tesla for 162 particular dollars, let's say it goes down to I don't know 150. So I sell it for a loss. Now if I buy Tesla right back, I can't claim that loss this particular year because it'll violate the what they call loss sale because it'll be in that 30-day period. So I would be able to write off the loss for the next year, but not this particular year. I hope I did a good job explaining. If you want to see a more in-depth video, just check the suggested video. So these are the key takeaways. A wash occurs when an investor purchases a security 30 days before or after selling an identical or similar security. So that's the kind of the key thing. The main thing is the IRS institutes a wash sale to prevent taxpayers from using the practice to reduce their tax liability. That's particularly what you can do now. You can still do now with crypto. So it says investors who sell a security at a loss cannot claim it if they have purchased the same or similar security within 30 days. So it's 30 days before or 30 days after, which would be a 60-day particular video. And also, I'm going over this because it's kind of really important so you kind of know how you can use it. It says in the U.S., now the text message just want to roll in. But it says in the U.S. you can claim up to $3,000 of total net loss whatever it is less. So if you have more than $3,000 for capital gains, it will be forwarded to the next particular year. But now this applies to stocks. Now, of course, that you can be. Now I'm gonna have to actually turn this down because for some reason my phone wanted to be going off a lot. Now that I'm recording the video. But yeah, so this rule applies to securities. Now, for tax purposes, when we deal with crypto, we're going to end up, we know crypto. We're going to go over why it doesn't apply to crypto right now. I believe in the future they will change it, but currently You can the WAR sale does not apply to crypto, and this is for securities. Now, the reason why it doesn't apply to crypto is for tax purposes. The IRS classified crypto as a property. As here is the turbo. Here's on TurboTax. It says what is a WAR sale, blah blah blah. Cryptocurrency is exempt from WAR sale rule. It says the IRS classifies virtual currency as property. This crypto follows the same rules as stocks and bonds. You pay tax if you sell, blah blah blah. But it says, but unlike stocks and bonds, crypto is largely unregulated. So cryptocurrency isn't a security. Securities are regulated within financial instruments, blah blah. This means crypto has the same trading rules as precious metals as gold and silver, which would make it exempt because they don't classify by the IRS anyway as far as tax purposes. So here's another thing that kind of goes over. It says the IRS WASL rule does not currently apply to crypto because it's considered virtual currency to be property rather than a security. So it's a technicality difference, but we can definitely see how. I'll show you how you can utilize that. As the effective means that there is no rule prohibiting crypto wash sales at the time of this writing. This means that technically crypto wash sales are allowed. However, lawmakers and I think they will end up changing it particularly soon. But here's another one that you might be like, okay, so like, what's the significance of this? So you can really, the main reason why you can actually buy, and you might think why you would want to sell a security and then buy it right back within a short period of time. So like I said, the main reason would be for tax purposes. So let's just let me give you an example, like with Bitcoin. And typically, this strategy would be very beneficial for very volatile assets or securities or assets that are super volatile. So a lot of times, volatile in a short period of time. So with Bitcoin, if something goes up, down, up, down, you can record your loss on paper and then buy it immediately right back. So it will be the same as you just holding it the whole time. But on paper, on paper, it's actually showing you had the loss, even though you bought the security right back. Yeah, so let's say Bitcoin went from 60,000 to 40,000. You end up selling it for the loss, then you end up buying the security right back. So if Bitcoin continues to go up, technically you still owning that particular assets, but on paper you have a loss. So on that particular loss, what you can do from your other investments that end up, particularly getting gains, that would actually on paper, from the profits that you did get from the other ones, you can end up offsetting the loss, that the paper loss, because you technically still own the Bitcoin. You can end up having it to show a paper loss so that you can pay less taxes on your particular gains. Now, of course, there's as far as for capital gains, there's a max of $3,000 that you can end up writing off per year. But you can actually utilize how volatile, because we know the crypto market is very volatile. So you can kind of use it, especially when the stock, crypto price fall drastically, sell it, buy it back, so that from at the end of the year you'll end up paying a lot less taxes. And the thing about it is, it's not like you have to, like with stocks, if you had, like I said, Tesla, if you tried the same particular approach, a lot you will have to wait 30 days before you purchase it again, and the security or the asset the price can change drastically. But if you can buy it, you can sell it and buy it right after, and within a few seconds, like, it's a way, like, I could still consider it a cheat code in which you can kind of really utilize this loophole in order to pay less particular taxes, and it would be particularly legal. So I just wanted to, kind of share this. Let me know in the comments below. What do you think about this? But that concludes this video. Let me know in the comments below, what do you think? If you haven't already, make sure you hit the like button. If you're new, make sure you subscribe to the channel.